Hello everyone, this is Muhammad from StarseedFX. Today I have got a game changer for you, mastering ABCD counter trend trading. Here I have a New Zealand USD 1 hour time frame. I have a change of character confirmed. We have a higher low here and the market is pushing up. As usual, I will use Fibonacci from the higher low to the highest point of the market, or to the high of the highest bullish candle of the market, and I will move with the market until the low of the highest bullish candle is broken. When that happens, that means I will have a higher high here. Okay, so here I have the low of the highest bullish candle broken, so I have a higher high confirmed. Now, by using Fibonacci from the higher low to the higher high, I have divided the market into two zones: the premium zone from 0 to 50% and the discount zone from 50% level to 100%. When we are trading an uptrend, we want to start buying when the market drop to the discount zone, right? So now I have a big premium zone over here. Maybe I can take advantage from the market, try to find a sell setup from this premium zone over here while I'm waiting for the market to drop to my discount zone to find a buy setup. Okay, I will do that only if I have a big discount zone like this zone here. If the discount zone is small, I'm not going to think about trading a counter trend. I will just wait for the market to drop directly to my discount zone and try to find buy setup. To start trading a counter trend from the premium zone to the discount zone, I will apply the same strategy pattern. I will wait for A, B, C pattern to be formed in the premium zone, and then I can trade it from the lower time frame, or even I can do it from the higher time frame. Now I am in the premium zone, will be waiting for A, B, C pattern to be confirmed. Then I can use Fibonacci to divide the market again into premium and discount. If you want to trade it from the higher time frame is okay. If you want to trade it from a lower time frame also is okay. Now I have A confirmed. Why? Because I have the low of the highest bullish candle broken by candle body. So I will mark this zone over here as A. I will be waiting for B to be confirmed. I will move the chart and let's wait for B. For B, I want the high of the lowest bearish candle to be broken by candle body or candle wick. We still don't have B. Now I have B. Why? Because for me, this candle over here is the lowest bearish candle. Yes, this candle here is lower, this candle here is lower, but again I would like to see the lowest candle of the trend not disturbed by any wicks, as I said many times. So I will consider this candle over here I'm marking to be my lowest bearish candle, and here I have B. So I'm waiting now for C. For C, I want B to be broken. Okay, let's extend the line. Now B is broken and I have C confirmed. So I will consider trading the counter trend and marking the ABC pattern as long as the market forming the ABC in the premium zone. Okay, because if the market from here A, B, and then drop directly, I'm not going to wait here for C and say, okay, I will trade a counter trend. I want the ABC pattern to be formed, and it is very important, the ABC pattern to be all formed inside the premium zone, which is a counter trend zone for me. Why? Because the main trend for me is an uptrend, and I am waiting for the market to drop to the discount zone so I can start buying. So what I'm trying to do here again is trying to take advantage of the market and try to set a counter trend, because either way I'm waiting for the market to drop to the 50%, which is my discount zone, and start looking for ABC pattern for buy. Now after I have A, B, C confirmed, I can use Fibonacci for the counter trend. Here A and C are very close, so it doesn't matter if I'm going to make it from A to the lowest candle over here of the trend, or C to the lowest candle of the trend. It's almost the same, right? So I'm going to use Fibonacci from A to the lowest candle here of the trend. So now I have Fibonacci in a counter trend. Now I have A, B, C pattern formed in the premium zone that I can trade as a counter trend. Okay, you only do that if you are familiar with trading a counter trend and you are willing to take the risk of trading a counter trend. Okay, if you are not experienced in trading the counter trend, just wait for the market to drop to the 50% to the discount zone, then you can trade following the market trend. Okay, now the next step after confirming A, B, C, using Fibonacci, dividing our trading zone again into premium and discount, because we are selling, so we want to sell from the premium, so we can place a pending buy at 50%, 61% or 78%, or if you want to trade that zone from a lower time frame, you can go to M5 and trade it from the lower time frame. But the point here is that we can take advantage of every single A, B, C, D in the market, or A, B, C, because we are waiting for D here to be confirmed. When I'm saying we can take advantage of every single ABC pattern or ABCD pattern, we also need to respect the market structure. We need to understand if we are following the trend or we are a counter trend. We need to be aware of our position in the market. We need to be aware of the market movement. In this example, we are talking about an uptrend and we are trading the premium zone as a counter trend. If this premium zone is not big enough, or I don't have an ABC pattern within the premium zone that confirm a good movement or a goal for me to trade it as a counter trend, I'm not going to take it. Okay, now it is your choice. If you want to trade this zone from lower time frame, you will wait for the market to tap into your sell zone, go to the lower time frame, find an ABC pattern within this sell area, and then use Fibonacci, divide your ABC pattern into premium and discount zone, wait for the market to be in your premium zone, and then you can sell. If you want to trade it from the high time frame, it's also an okay. You can place a pending sell at 50%, 61.8 or 78%. Let's have the scenario of trading this setup from this higher time frame, from H1 time frame. So in this scenario, I will place my stop loss at 100%, a pending sell at 61%, and take profit at minus 27. That would be my setup. Let's play the chart and see what will happen. Market still moving down. Started to move up. Here we have impulsive move, triggered our pending sell, but of course also stopped us out. So I have a trade that was stopped out. Now the question is, can I re-enter or not? Is this setup still valid or it becomes invalid? My answer for this question is this setup remains valid to me. Why? Because the 100% level here, or my ABC pattern, or actually ABCD pattern, was not broken by candle body. Okay, if this candle here broken by body above A, I would consider this setup invalid setup. But as this candle just swept the liquidity above A and C and closed lower by candle body, closed back inside my ABCD pattern, I consider this setup here a valid setup and I can take a second entry. So if this one is an H1 candle, I will wait for the whole candle to be finished, for the whole hour to be finished, and then I will see the situation. If the candle closed lower or within my ABC pattern, like what happened in this scenario here, I will have a second entry. If you want to re-enter the market again, hoping to make up your first loss, it's up to you. If you think, okay, I don't want to re-enter again, it's also up to you. But for me, I'm more focusing on the whole ABC pattern. Is it valid or invalid? Again, in this scenario, the ABCD pattern is remaining valid to me. Why? Because this candle over here swept the liquidity above the ABCD pattern here and closed within my ABCD pattern, or closed within my sell area. I will re-enter again, but I will make a modification for my entry, right? First, I will move my stop loss to be on top of this candle here, because this candle to me right now is a liquidity sweeper candle. Here is liquidity that was swept, so this is a liquidity sweeper candle, and I will place my stop loss on top of that candle. As for my entry, I have two choices. Now the price or this candle closed above the 78.6% level. So I have two choices: to have a direct entry from here, which is a direct sell, or I place a pending sell at 78. If we make a direct entry, we are going to spare that few pips will be added for our take profit. So whatever you choose is right. If the price closes below 78%, you also have two choices. You can make a direct entry or to place a pending sell at 61. Okay, so let's consider we have a direct sell here and move the chart. So for this trade, the market moved down directly and make a retracement, another one, and another retracement over here, right? The market did not reach the take profit yet, so this trade would be still running, and also the market did not drop to our discount zone below the 50%, so we can start finding a buy pattern or an ABC pattern for buy. So the main point here that I want to make it clear that if the ABCD pattern broken by candle wick, I consider that pattern still valid. If the ABCD pattern broken by candle body, I will consider the pattern invalid and I'm not going to take any further action or a second entry for my trade. Thanks for diving into today's insights on ABCD counter trend trading with me. If you found value in what you learned and want more tips and strategies to elevate your trading game, don't forget to subscribe to our channel. Hit that subscribe button and ring the notification bell so you never miss out our latest content. Let's journey towards trading success together. See you in the next video.